All right. Good morning, trade pros. Welcome to morning market update for Thursday, July the 18th. I hope you are all having a tremendous day. I feel like I'm a little close to the camera. I'm a little scared to move it back because this cable is very finicky. Is it still working? Let me just double check. Yeah, it's still working. Great. In this morning market update, we're going to talk about some earnings that just came out yesterday and how that's impacting the stock market. And then we'll also talk about how to trade today. Yesterday, our bias was selling strength and being short. And after a summer market of volatility, it's played out pretty good yesterday. All right. We all had some great opportunities downside. And the reason I thought that the downside was the right side is a lot of pressures influencing the market outside economic and also earnings, a lot of antitrust probes, etc. And I just felt like the retail bus was full. Retail bus is full. That's what the t-shirt's all about. So I thought I'd wear it this morning. I don't know, just for fun. In today's morning market update, we're going to talk about a few things, mostly earnings. Yesterday was the third session or second straight session of declines across Wall Street. S&P was down more than 0.2%, but as a whole, the markets were down 0.2. Netflix dropped 12% after hours, and that influenced NASDAQ. NASDAQ slid on that report very aggressively. All right, so that's one way to trade earnings rather than trying to trade Netflix stock after hours, which is very dangerous because there's thin volume and liquidity, and it's after hours trading. You could actually trade the NASDAQ on the news of these key companies. So that's one trading strategy. That's an idea for a video that we're going to probably do in the future. All right. It dropped 12% because it lost subscribers at a record rate. Netflix really is a platform that needs volume. All right. So the more subscribers they get, the more revenue they generate, obviously. And yesterday they reported that they missed domestic and international subscribers and by a large shot. All right. They're close to losing subscribers, let alone gaining less. So that was the number that shocked traders, and that's what caused Netflix to drop 12%. Everybody sold it. All right, across the board. And so that's kind of what worried markets and propelled the sell-off after the bell, especially in NASDAQ and the technology sector complex. And what's the reason for that? All right, if you think about this, there's been a lot of competition to online streaming. And I don't know about you guys, I don't watch a lot of online streaming content. I only watch it when the wife travels and I get home at night and I'm bored. All right, when I need some company, I watch it as I cook and make dinner or whatever. But I don't watch much of it. And so I think that even though there's more competition, there's actually less interest in watching stuff. There's more people out and about doing things, especially in the summer. And so this sort of shocked the markets. All right, that's where we're down. The poor start to the second quarter for all of FANG stocks is putting very big focus on the next report. And also it's putting a lot of downside pressure in technology sector, which is translating into the broad market. All right. Also, there's a report that U.S. and China trade negotiations are stalling over this Huawei restriction or the ban for United States to sell technology to Huawei. That also weighed on the sentiment, and that's one of the conditions China has to lift and remove that ban before they sit down at the table to talk. That doesn't seem like it's going to happen, and I think that disconnect there leads to trade deal being less likely and getting pushed down the road, and that's infusing some risk-off sentiment in the markets. All right. Also, be on the lookout today for Microsoft earnings. They're happening after the closing bell. Microsoft's a giant cash cow. They're a very mature industry and business. They've been around forever. And right now, they're just paying big dividends, but they're not innovating as much. I mean, you know what? That's not true. Microsoft has tried hard to innovate a lot in the mobile platform. They had a lot of phones. That didn't work out. All right. But actually, one thing I love about Microsoft is their products. Like, I'm a big supporter of them. The keyboards, like this thing's my go-to. I broke one, I bought another one. This one should break, I'll buy two more. I'm a big fan of them. So Microsoft earnings after the bell. My keyboard purchases are not enough to sway the stock. This isn't inside information. At 7:30, we also received the report from Morgan Stanley. It's an investment bank. It's not as big into core banking as other banks. Bank earnings are done, and I know it cut off for a second there. The takeaway from all of the bank earnings the last 2 days is that they're beating on revenue, but at the same time, there's concerns that dropping or dovish interest rate environments are going to put pressure on bank earnings in the future. Morgan Stanley beat earnings at 123 versus 113 on an EPS, adjusted earnings per share basis. Revenue is 10.29 billion versus 9.98 billion. So they raised their quarterly dividend as well by 16.7%. And that's the good news. Here's the news that isn't as good. That's a little troubling for Morgan Stanley, that I think is going to lead some institutional holders selling the stock or reducing their exposure in it. Fixed income, it's called FIC, fixed income, commodities and currencies. Sales and trading revenue is at 1.13 billion, down from 1.39 year over year. All right, equity sales and trading revenue, 2.13 billion versus 2.47 billion year over year, down as well. Global wealth management revenue, 4.41 billion versus 4.43. Not a big miss, but still down year over year. And investment management revenue was up to 839 million versus 691 year over year. All right, so the revenues are up in investment management, but global wealth management, FIC, and trading revenues and sales are down across the board, and that's not a good sign. All right. And despite all of that, compensation and benefits as a percentage of net income was 44% versus 44% year over year. So they've maintained their compensation packages. All right, they're getting paid the same. They beat the top line, but underneath there's a little bit of worry that's going to cause some downside, I believe, for Morgan Stanley. All right, isn't that a mind-blowing number, though? That to me was a mind-blowing number. That compensation and benefits as a percentage of net income. So that means after they pay all their expenses, revenue and net income are totally different. Any business owner knows that. If I could get net income for every dollar of revenue that comes in, oh man, 100% of it, it's one hell of a business you're running. Not possible, obviously, but it's 44%. Almost 44 cents out of every $1 that Morgan Stanley earns on a net basis after paying the bills goes for staffing. Right? That's massive. That's huge. Just a little number I wanted to highlight because I thought it was interesting. In today's markets, Japan's down 2%, Hong Kong's down 0.5%, China's down 1%, India's down 0.8%. All right, that's red across the board in Asian markets, following through yesterday's momentum. In Europe at midday, London's down 0.3, Paris is flat, Frankfurt's down 0.5%, and in the United States, your futures are down 0.2, S&P's down 0.2, Nasdaq's down 0.2 as well, red across the board also, but seeing a little bit of a rebound here early in the morning. Yesterday, we told you the market's going to be weak off the open, sell rallies, stick with it, and what a big move we had yesterday. In comparison to summer volatility, this was great follow-through and good opportunity. So all in all today, I think we're going to get a little bit of a rebound early on in the morning. I see some early morning strength, which would take us a little bit higher in the S&P 500, take out some short sellers, take out their stops, and then push back to the downside in the afternoon. All right, crude prices are up 1%. Yesterday, we had massive success in the trading room. We had an oil inventory report that I told you about. I said in 1 day or 1 hour of 1 day, you can make your whole weekly income. Well, guess what? Yesterday, a lot of our traders made 50 cents, some of them more. I captured 40 cents of the move. A lot of our traders did even better than me, which really touches my heart. Honestly, when I see people doing better than I am, it's a blessing. I love it. I love to see it. I'm not an ego person at all. I make enough. I always want more, obviously, but I love it when our members do good. And they did phenomenal. All right, somebody had a 62-cent winner, I think, which, to put that in perspective, with a $1,000 account, that's all it took for margin, $620 profit. You can see how when I tell you in 1 hour you have the opportunity to make for a whole week, no matter what job you do. I mean it. It's a huge opportunity and great report, and we traded it like trade pros. Very proud of the team. And I wanted to squawk that news with everybody. I was so happy. I went home with a big smile on my face because I love it when you guys do well. Gold's flat for the day, down a little bit now, actually. Bitcoin's up 6.3%, but remains below 10,000 on this Libra disappointment from Congress and from the House of Representatives grilling Facebook about it. It seems like it's highlighted a lot more doubts than opportunities. All right, today's calendar, we had initial jobless claims at 8:30. They came out at 216,000, right in line with expectation. And 4-week average was slightly lower, 218.75 versus 219.25 thousand, which, slightly lower is actually a positive thing, but not low enough that it makes a big difference. So it's kind of a non-event. 10 a.m. we have leading indicators. 1030 natural gas inventory, which is like way less opportunistic. We don't even trade it. 2:15 Fed's Williams is going to speak on monetary policy. At 4:30 we have money supply and Fed balance sheet. All right, that's what we got for you for the day. We got to get in here and open up the trading room. I appreciate you guys. Thank you for being here. Look for weakness overall in these markets. I think we're going to slip a little bit lower because the retail bus is getting full. And I think we've let some of the latecomers on the upside go. They've gotten off the train. Because when we're riding up these all-time highs, I told our traders, look, it just seems like everybody's long. If everybody's long, how's the market going to go up? We need more new money to come in to bid it up, right? More bids. And so now we've wiped out some of the sell stops, and I think we're going to retry the upside a little bit this morning. And it's counterintuitive to the last 2 days momentum, but it's in line with the overall trend of the upside. Big bulls die slow, all right? You can't see a little downside and say, oh my God, the market's over. The whole market's going to go down 60%. One of these days it'll happen, but bull markets are resilient. I think we're going to try the upside one more time today and see what we have. We're going to really try the interest of the buyers. And if we don't see a lot of buying as we start to move up, then downsize the right side for the rest of the week as we go into options expiry tomorrow. You guys have a great day. Thanks for being here. Take care. Manage your risk and trade like a trade pro. We'll see you tomorrow. Have a great day and take care. Bye. All right, trade pros in the room. Let's get this show on the road. I'm going to start with the S&P 500. Marky for the Victoria on to the right. He's intoxicated. Well, actually, he's probably flying there at this moment, and he's intoxicated on the airplane. Trading. All right, guys, let's get started. Start with that trade. Let's do this. I'm going to map out some key levels for you and opportunities for the day.